We're going to talk about how to change your LLC tax status to a corporation or S-corporation. Your financial advisor or tax professional may have told you the potential benefits if you decide to have your LLC file an election to be taxed as either a corporation or an S-corporation. And this video discusses the benefits and process of filing such an election and the correct forms to use for making this election. Now, the purpose of this video is to provide general information only. Before you take any action on anything covered in this video, get the advice of a licensed tax professional such as a CPA, and that was called my CYA. Cover your, you know the rest. Now, if you change the LLC's tax status to a corporation or an S-corporation, the legal status of the LLC remains the same. In other words, you still function as an LLC in every way, such as the legal protection that it provides. The only real difference is how it pays taxes. How an LLC is usually taxed. By default, a limited liability company, LLC, is not recognized by the IRS as a taxing entity. So how the members pay tax is based on how many members that it has. A single member LLC is treated as a sole proprietorship or disregarded entity on the member's personal tax return. A multiple member LLC is treated for tax purposes as a partnership. So your CPA will typically file a 1065 partnership tax form, and the partners get the K-1 form to attach to and report income or losses on their personal tax returns. Now, both single member and multiple member LLCs may elect to be treated as corporations or S-corporations for income tax purposes. And if you do have a single member LLC, there is a dating app for that, so you can find a partner and live happily ever after. Electing corporation versus S-corporation status. Now, the process of changing the tax status of an LLC to a corporation or S-corporation is called making a tax election. The two processes are different. To elect corporation status, one must file the IRS Form 8832 Entity Classification Election for the LLC. To elect S-corporation status, the LLC must file IRS Form 2553 Election by Small Business Corporation. Now, back in the old days, we would file the 8832 form and choose corporation taxation. Afterwards, we would file the 2553 form and choose S-corporation election. The IRS website says that two-step process is no longer necessary. An S-corporation is a corporation tax classification, not a separate type of business. A business that is already a corporation files the form 2553 to elect to be treated as an S-corporation. LLCs electing to be taxed as corporations. Filing the Form 8832. If you want your LLC to be taxed as a corporation, you must file the Form 8832. Now, here are some things you need to know about this election. This form allows eligible entities to file this election, and LLCs are by definition eligible entities. This form also includes a consent statement which may be signed by all of the LLC members or by one member on behalf of all the members. If one member signs, there must be some record in company membership meetings that all members approved to this election. You must provide the names and identifying numbers of the owners, such as the Social Security numbers for single-member LLCs, and employer IDs for multi-member LLCs. Now, the first section helps you to determine the eligibility of your business to apply for this change. The second section asks you to select the current entity type and the type you are selecting. The terms domestic and foreign in this section have to do with the state or country where the business is registered. By the way, LLCs are disregarded entities or partnerships by default depending on how many members, so no need for an 8832 to keep it that way. But with an offshore LLC, you do need to elect disregarded entity or partnership status with the 8832 form. The last section includes a consent statement and requires signatures. Single owner LLCs and Forms 8832. If your LLC has only one member, a single member LLC, the options noted on the form are to be classified as an association or be disregarded as a separate entity. An LLC with only one owner can be classified as a disregarded entity. Now, this designation means the LLC is not separate from the owner for income tax purposes, filing business income taxes on Schedule C as part of the owner's personal tax return. There is nothing you need to do to have this classification. And for that matter, I could use a classy vacation. I'm thinking Barcelona, maybe the Bahamas. Now, if you checked no in box 3 because you don't have more than one owner, you will need to give the owner's name and identifying number, taxpayer ID number. Then, in part 1, box 6, you would check box C, a domestic eligible entity with a single owner electing to be disregarded as a separate entity, or box F, a foreign eligible entity. LLC electing to be taxed as an S-corporation. In the same way, as a corporation elects corporation tax status, an LLC may elect S-corporation tax status by filing IRS 2553 with the IRS. This election must be made with no more than 2 months and 15 days after the beginning of the tax year when the election is to go into effect. So why elect S-corporation status? The other tax option for your LLC is to elect to be taxed as an S-corporation. Your LLC will need to meet the eligibility requirements of an S-corporation. Both the LLC by default and the S-corporation status are pass-through entities, meaning that the income of the business passes through to the owners. S-corporation status has 2 benefits. First, it allows the business to avoid the double taxation issue of corporations. Double taxation is taxing the C corporation on its income and then taxing the shareholder on its dividends. In fact, my grandmother once said, "Harold, when I touch the refrigerator and the stove at the same time, I get shocked." My grandfather replied, "Well, don't touch them both at the same time then." Along those same lines, one way around the double taxation with the C corporation is to just pay a salary to the owners. The salary is tax deductible to the corporation and simply don't pay dividends. Now, S-corporation officers who work for the business are considered employees. They are not considered self-employed and they don't pay self-employment taxes, Social Security and Medicare, on distributions of profits to the shareholders of the S-corporation. This can be a tremendous tax saving for those owners. But it is very important to know that they must be paid a reasonable salary in addition to the distributions and pay income taxes, Social Security, and Medicare on the salary portion of their income. If you want your LLC to be taxed as an S-corporation, you just need to file the Form 2553. You don't need to elect to be taxed as a corporation first, like we used to do in the old days. Form 2553 is similar to Form 8832 above, with some differences. The election begins on a specific tax year, and you must select the type of tax year, including the fiscal year or financial year. Form 2553 discusses shareholders, but your LLC probably doesn't have shareholders. In this case, you should enter the percentage of ownership and the date acquired. A single owner LLC would have 100% of the ownership. As with Form 8832, you must list all of the shareholders with their percentages of ownership and taxpayer IDs. All shareholders/owners must consent to the election. Timing your tax election. Now, before you decide to have your LLC elect corporation or S-corporation status, make sure you are eligible to make this election. You must make the election at a specific time relating to the tax year it will become effective. These details are also included in the instructions. Form 8832. You must designate an election effective date. The election can't take effect more than 75 days before the date the election is filed, nor can it take effect later than 12 months after the date of filing. There's also a late election relief. For example, if you file the election on January 1st of one year, the election must take place no later than December 31st of the same year and no earlier than October 18th of the prior year. Form 2553. You must designate the tax year beginning with a specific month, day, and year. You must complete and file this form no more than 2 months and 15 days after the beginning of the tax year the election is to take effect, or any time during the tax year before the tax year is to take effect. For example, if you designate January 1st of one year as the beginning of your tax year, you must file the election in the prior year, but no later than March 15th of the same year. Bottom line is, I've heard tax advisors repeatedly say, if your LLC invests in real estate or holds passive stock market investments, leave it alone. Its default status is the best status, they say. Otherwise, if operating a business rather than holding passive investments, converting to an S-corporation often makes the most sense. I hope this helps. Remember, get advice from your CPA or tax attorney before doing anything here. That's it for now. Please click like, subscribe, and share this video with others. Thanks for watching. This is The Business Guy.